Welcome back, Adam here. Today I'm looking at business mileage and in particular claiming the mileage allowance. I'm going to cover this from a number of different angles, including claiming when you are employed versus claiming when you are self-employed, so that everybody watching knows how this works for their own situation. I'll also briefly touch on VAT on business mileage for anyone out there who is VAT registered. So firstly, let's start with what actually counts as business mileage. Most journeys that you undertake on behalf of your employer or your self-employed business will be allowable business mileage, providing it meets the wholly and exclusively test, which in simple terms just requires the main purpose of the travel to be for the business and not for some other reason. But there's one journey in particular that always gets questioned because it's one that we all do, and that is traveling from your home to your workplace. The journey from home to a workplace is only allowable if the workplace is considered to be a temporary one. An example of a temporary workplace might be spending a week working at a client's premises in order to complete a particular task, like a stock take or an audit or setting up their IT system. Temporary workplace rules can be complicated as there are many variables. For anyone looking to learn more, you would want to start by looking up the 24-month rule, which states that a workplace is permanent if the following two statements are true. Firstly, the employee has spent or is likely to spend more than 40% of their working hours at the workplace. And secondly, the employee has attended or is likely to attend that workplace for a period lasting more than 24 months. If both of these statements read true about your workplace, then that workplace is permanent, and the travel from home to the workplace would be considered ordinary commuting and would not be allowable business mileage. This means that most taxpayers who travel from their home to their permanent workplace every day won't be able to claim for that mileage, and the same would apply to the self-employed when traveling to a permanent workplace. Any other business mileage, though, including traveling to a temporary workplace, would usually be considered allowable. Now, as for claiming for business mileage, there are different methods depending on whether you are employed or whether you are self-employed. So first, let's look at the process for employees. HMRC publish what they call approved mileage rates. The rates on screen now are designed to cover the cost of the fuel, the maintenance, and all the general running costs of the vehicle. These are the rates that your employer can reimburse you for business mileage without there being any tax implications for you or them. You'll notice that the rate reduces significantly once the employee claims for more than 10,000 business miles in a single tax year. But as soon as the tax year ends, the allowance will refresh again. There is no need to spread the 10,000 mile allowance across a tax year. You simply claim the first 10,000 miles at 45 pence, and then anything after that is at 25 pence. If you ride a motorcycle or even a bike, there are specific rates for this. There is also an additional allowance of 5 pence per mile for anyone driving a van or car who takes a passenger with them. It's 5 pence per mile per passenger, so if you were to carry 3 additional people in the car, then that's an additional 15 pence per mile. The passengers also need to be travelling for business purposes. Of course, the ideal situation is that you incur the business mileage cost and then your employer reimburses you in full using the approved rate provided by HMRC, as essentially that would mean that it hasn't cost you anything. If they pay you any more than this, then it would usually be considered a taxable benefit, and income tax would be payable by the employee, as well as national insurance by the employer. They are allowed to pay you less or even nothing at all, but that's going to leave you out of pocket. So in that situation, the employee would be able to claim tax relief on the difference between what was received and the HMRC HMRC approved mileage rate. The only catch is that if your employer doesn't offer the extra 5 pence per mile for passengers, or if they were to pay a lower rate, unfortunately, you're not able to claim tax relief on this element. An example of this would be if you did 10,000 miles in a tax year, the approved rate would suggest that your employer could reimburse you up to £4,500 tax-free. But if they only pay 25 pence per mile, then you're only going to receive £2,500. The employee would then be able to claim tax relief directly from HMRC for the £2,000 underpayment. If they're a 20% taxpayer, they'll end up getting £400 reimbursed, and 40% taxpayers are going to recover £800 in that scenario. If, however, you did the 10,000 miles with a passenger in the vehicle and the employer didn't have a policy of paying extra for this, then the amount that you can claim tax relief on from HMRC remains the same, because HMRC don't offer additional tax relief on that element. In reality, many employers will simply align their mileage rates with those of HMRC so that no claim for additional tax relief is needed. It's only where they differ from those rates that you would want to make a claim. To make this claim, the employee has two options. If they already complete an annual self-assessment tax return, then they can include these details under the employment-related expenses section of the return. This would ensure that they recover any overpaid tax. The other option is to use HMRC's online employment-related expenses tool. Again, this will ensure that any overpaid tax is recovered, usually in the form of a repayment. This tool can be used to claim for the previous 4 tax years. If you're employed, you must have paid tax in the tax year in order to get tax relief on these business miles. So someone earning below the personal allowance is unlikely to gain any benefit from making a claim because they usually wouldn't have paid any tax in the first place. And essentially, what we're doing here is claiming back overpaid tax. Now, the rate shown on screen might seem a bit high, and many people feel like they are profiting from doing business mileage at these rates, which can be true. But just know these are the rates that apply when you are using your own vehicle to do business mileage, which means the cost of the maintenance, the fuel, and the cost of acquiring that vehicle are all costs that you will have to incur at some point, even if it isn't right now. So there is actually some thought that goes into these rates to ensure all of these costs are covered. There are also situations where an employee might use a company car to do their business mileage. Company cars are often used as part of a remuneration package for senior employees, and those employees will usually have private use of those company vehicles outside of work hours. In that situation, HMRC publish a separate set of rates known as advisory fuel rates, which only account for the fuel costs incurred, because when it's a company car, it's the company who will pay for all of the general running costs, and it's the company who will purchase the vehicle. So all of that has to be stripped out of the mileage rate. The rate you use depends on the size of the engine and the fuel type. All EVs have a standalone advisory rate of 9 pence per mile, which is to cover the cost of charging. As for the self-employed, the process to account for business mileage is slightly different. Firstly, you have two options for calculating the cost of the mileage. The first is by using the exact same mileage rates that we saw before, applying those rates to the number of business miles travelled, and that will give you the amount to be expensed. If you are self-employed, this is known as simplified expenses. If we use our example of 10,000 miles in a van or car at 45 pence per mile, that's £4,500. It is important to maintain some kind of mileage log though when claiming simplified expenses. Usually this will detail the date, the reason for travel, and the amount of miles driven as a minimum. In the event of an investigation, HMRC may ask to see proof of business mileage undertaken, and the mileage log is the best way to evidence it. The second option for the self-employed is to use the actual cost incurred, which is done by expensing the actual amount spent on fuel, the actual amount spent on servicing and repairs, the actual cost of road tax. The main benefit of this method is that you may also be able to claim the cost of buying a vehicle for use in your business. The cost of the vehicle won't usually be an allowable expense in the traditional way, but you are able to claim capital allowances on it, which, depending on the rules at the time and the type of vehicle that you purchase, could mean the full purchase cost being offset against your income in the year of purchase, or it could mean spreading the cost of the purchase across a number of years. Either way, you still achieve tax relief on the purchase cost of the vehicle. It's just a question of over how long. So if you're planning to buy a £20,000 van through your business, then it would usually make sense to use the actual cost so that you can get tax relief on the £20,000 purchase cost as well as the general running cost. The business owner is free to choose whichever method they prefer or whichever is more beneficial for their situation. The one catch, though, is that once you've claimed for the cost of a vehicle, you can no longer use a simplified method for business mileage done by that vehicle. Instead, you would have to stick with claiming the actual cost incurred. If you use multiple vehicles to do business mileage, it wouldn't be a problem to have one using the actual cost incurred and one using the simplified method, providing the mileage is dealt with separately and adequate records are kept for both. In terms of obtaining tax relief for business mileage, the self-employed would simply include the expense when calculating their profit from self-employment, which is then reported via a self-assessment tax return. So in the case of our £4,500 expense from the earlier example, we would simply include this figure in our allowable expenses when reporting to HMRC. Providing the individual has made a self-employed profit in the tax year, they will benefit from tax relief in that tax year, as the cost of allowable business mileage would reduce the amount of tax payable. If the individual has made a loss in the tax year, they are able to roll that loss forward to offset against future profits from self-employment, which means that even if they haven't paid tax this tax year, they may still be able to benefit from tax relief on the business mileage in the future, which is different from the employee who can only get tax relief if they've paid tax in that tax year. There's no rolling forward of losses for employees. If your self-employed business is registered for VAT, then you would be able to claim input VAT on any business mileage claimed under the actual cost method in the usual way. So if you have a receipt for maintenance, and you claim the VAT amount per the receipt, and if you have a receipt for fuel, you claim the VAT amount per that receipt. If your business is using the simplified expenses method, though, then the VAT treatment is a little different, as you'll only be able to claim VAT on the fuel element of the mileage. So even where you're claiming the full 45 pence per mile, you wouldn't be able to assume that that includes 20% VAT. Instead, you would have to look up the advisory fuel rate for the vehicle in question and then claim the VAT amount on this. Based on a VAT rate of 20%, a quick way to determine how much VAT is included in an advisory fuel rate of, say, 14 pence is to divide by 6. In this case, there is 2.33 pence per mile of input VAT. That was how business mileage works for employees and the self-employed. For more information, check out the related blogs on our website. I hope you found that useful. That is all for today. Thanks for watching. See you next time.